The headlines are screaming. The US-Iran conflict is heating up and the market is doing exactly what it was programmed to do. It's moving before you even finish reading the notification on your phone. Volatility is spiking, fear is trending, and I'm already seeing the same bad question flooding the comments. Should I sell everything and move to cash? If that's your plan, listen closely. You aren't protecting yourself. You're locking in losses and praying for a miracle entry point that will never come. You'll wait for it to feel safe, and by then, the bounce has already happened. That is how most people turn a temporary headline into a permanent portfolio disaster. At Smart Wealth Code, we don't trade politics and we don't cheer for war. We analyze what money does when uncertainty hits. Unless you believe we're at the dawn of World War III, this is not an end of market event. This is a pricing event. And pricing events are where the elite investors get paid. You want proof that headlines are noise? Let's look at February 2022. Russia invades Ukraine. The world thinks it's over. On day one, the Nasdaq was down over 3% in the morning. By the closing bell, it was up over 3%. Money doesn't wait for the news to feel comfortable. Big institutional players use your fear to fill their orders. The same thing happened during the 2025 Israel-Iran flare-ups. A massive drop on day one, followed by a steady climb as the market absorbed the shock. The Smart Wealth Code. Rule: markets price a shock, then they get bored and hunt for growth. If you sell when everyone is scared and buy when everyone is relieved, you are effectively donating your wealth to the disciplined. Which side of that transaction do you want to be on? Now let's talk about the easy trades. When Iran is in the news, everyone asks, are you buying oil? Oil jumps because the story is simple. You hear Strait of Hormuz and you imagine gas lines. But oil is a commodity of emotion. It spikes on rumors and crashes on headlines. For a swing trader, it's a playground. For a long-term investor, it's a distraction. I don't build my future on a barrel of emotion. And then there's cash. People run to cash like it's a bunker. But cash isn't safety, it's a slow leak. While you wait for clarity, inflation eats your purchasing power, and the best up days in market history, which usually happen right after the worst down days, pass you by. Cash isn't courage, it's fear dressed up as patience. The 5 options you have. You need to choose one. Stop copying someone else's risk tolerance. Here are the 4 options of the Smart Wealth Code for times of conflict. Option 1, the cash buffer, the sleep easy plan. Keep enough cash to prevent you from panic selling your assets, but realize this is a pause button, not a growth strategy. Option 2, the dividend anchor, SCHD. This is the calm lane. You buy quality, high cash flow companies that pay you to wait. You won't see 100% gains, but you won't get whipsawed by the headlines either. Option 3, the S&P 500, the default machine. You buy the entire engine of American business. You don't try to be clever. You just let time do the heavy lifting. Option 4, buying the tech dip, the bumpy lane. When war screams, growth stocks get sold off first. That bad mood pricing is an invitation to buy the infrastructure of the future at a discount. Option 5, move into metals or safe haven assets. With another expensive war underway, the governments won't think twice before turning the money printers on and piling on the debt to compound the existing mayhem. The combination of option 4 and 5 is what I would do in such a scenario. I'm not chasing lottery tickets. I'm buying the boring backbone of the digital age and mundane safe haven. Here are the 5 I'm watching while the market panics. Stock 1, Google, GOOGL. When the world gets loud, search volume goes up. YouTube consumption goes up. Google has the one thing AI needs most: attention. They have the users, the cash flow, and the distribution. Stock 2, Nvidia, NVDA. If AI is the new gold rush, Nvidia owns the shovel factory. Fear pushes growth multiples down, creating entry points for a company that literally powers the modern world's compute. Stock 3, Palantir, PLTR. This is the ultimate geopolitical play. It gets hit by the tech sell-off during panic, but its actual business, defense, and government data becomes more relevant when global tensions rise. Metal one, silver, the asset that shields me from nonstop money printing. This is available today at around $82 and change, 33% below its all-time high. Instrument 2, SILJ. If silver rises, who benefits the most? The miners. If silver rises to $120, miners will command Nvidia like margins, and today they are priced for $50 to $60 silver. I'm buying these in pieces, dollar cost averaging. I'm not trying to nail the bottom. I'm trying to build a position that looks genius in 2029. Here's the bottom line. The market doesn't reward you for being comfortable. It rewards you for being right when everyone else is terrified. Refuse to let a 24-hour news cycle dictate a 10-year financial plan. You have to stop trading your feelings and start following a scoreboard. The US-Iran conflict is a tragedy on a human level, but on a financial level, it's a stress test. It's the market asking you, do you actually believe in the future of these companies, or were you just a fair weather fan? If you believe in the picks and shovels of the next decade, the Googles, the Nvidias, the Palantirs, then these red candles aren't a warning. They are a clearance sale. Build your rules, follow your lane, and remember, wealth isn't made in the green, it's secured in the red. If you're ready to stop reacting and start architecting your portfolio, hit that subscribe button and join the Smart Wealth Code community. If you made it to the very end, drop the phrase strategy over stress in the comments so I know who the real players are. Stay rational, stay invested. I'll see you in the next breakdown.